Welcome back to Teshkid Effects for another Agix price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Agix chart, which at the time of this recording is holding above the 20-day MA here on the 4-hour chart, which is now acting as support for us to continue gearing up. We have also managed to break above a key area of resistance at around the $0.35 mark. We have also continued to obey the Elliot structures, where we have been seeing a breakdown to the lower side in the formation of these higher Elliot count too, and we have also managed to get into the minimum retracement area in the formation of these larger Elliot count too, which lies between the $0.35 mark and the $0.174 mark, though we have not yet fully maximized our target areas, but we are seeing a bit of a bounce to the upper side in what could be the start of an impulsive wave to the upper side in the formation of these wave 3. And before I get further into the technical analysis and also sketch out my target areas to the upper side in the formation of that wave 3, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to first give you a recap of what has been happening, where you can see that after making our lower low down there, we started this massive bounce to the upper side, obeying the Elliot structures, where we first saw this 1-2 setup to the upper side, and after seeing the 1-2 setup, we started this Elliot structure to the upper side, having that as the first wave, giving us a peak at around the $0.67 mark. And after seeing the high for that wave 1, whatever we expected next was a corrective structure to the lower side in the formation of this wave 2, and using the Fibonacci's, connecting them from the low of the first wave down there to the high of that wave 1, I was able to come up with a minimum retracement area to the lower side in the formation of that wave 2 between the fib level 0.5 and the fib level 0.78, which is a target area that lies between the $0.36 mark and the $0.17547 mark. And at the time of this recording, you can see that we have fully maximized the target area between the fib level 0.5 and the fib level 0.618 in a move that has now given us a low at around the $0.29 mark. And at the time of this recording, we are seeing a bit of a bounce to the upper side in what could be the start of an impulsive wave to the upper side in the formation of these larger Elliot wave count 3. And by first giving you a measure from this low that we made down here, you can see that the market is up by more than 32.67%, which is a very nice bounce to the upper side. And if that is the case, and whatever we are seeing is the start of this impulsive wave to the upper side in the formation of this wave 3, then there are key moves that we need to continue watching here on the Agix chart. And the first one is that we need to continue holding above our key area of support at around the $0.35 mark. And as long as we are holding above that, then we have the support that we need for us to continue gearing up to see a break above this high at around the $0.56 mark. And the moment we manage to break above that, then I'll be watching the wave 1 high, which lies at around the $0.67 mark, and a break above that, then that will be enough confirmation that whatever we are seeing is the start of that impulsive wave to the upper side in the formation of that wave 3, and sketching out a target area to the upper side in the formation of that wave 3 by connecting the trend based Fibonacci from the low of the first wave down there to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upper side in the formation of that wave 3 at the fib level 1.618, and that is at around the $1.30849 mark, and that is the minimum that we can expect Agix to do in the formation of that larger Elliot wave count 3 to the upper side. So for that upward movement to continue, we need to continue holding above our key area of support at around the $0.35 mark, continue gearing up and see a break above the $0.56 mark and above the $0.67 mark is enough confirmation that we are back in the run up to the upper side in the formation of that wave 3. But in case we see a breakdown to the lower side, maybe lose our key area of support at around the $0.5 mark once more, lose the 20-day MA, and continue seeing the breakdown over here, then there are chances that we might see one more leg down in the formation of these higher Elliot wave count 2. And if that is the case and the breakdown continues, then I'll have to extend my target area over here in the formation of these larger Elliot wave count 2 back to the fib level 0.78. And in case we lose the fib level 0.618, which lies at around the $0.028 mark, then I'll be watching the fib level 0.78, which lies at around the $0.17328 mark. and that is the minimum that I can expect AGX to do in case the breakdown continues. But for now, there are chances that the low for that second wave is in, and we might continue gearing up in the formation of that wave 3, manage to break above these highs, and also fully maximize our target areas. So let's be patient and see how that plays out. Continue watching for those confirmations, and also continue watching our key area of support at around the $0.35 mark, and also taking a look at the indicators to see what movements will be supported on the RSI. We are trading at around the 58 mark, meaning we have massive room for us to fully support higher prices. Also taking a look at the MACD, we have been able to print a bullish cross, fully supporting higher prices. So let's be patient and see how that plays out, and I'll be keeping you updated.